Kombe is with the Bank of Zambia as leading researcher on the effects of financial technologies and the feasibility of CBDCs in developing economies, and he was chairperson of the Central Bank of Zambia Financial Technologies Working Group. He's a certified digital finance practitioner and active in projects with the IMF, the World Bank, and the ITU. Kombe holds a Doctor of Business Administration with a research thesis on CBDC implementations and many impressive certifications. He's a thought leader and frequent speaker on fintech, CBDC, AI in finance, cybersecurity, and more. And last but not least, I want to introduce our special guest, Bart from Google, who will answer the first panel question. What is next for AI in central banks? So Bart said the following. Here are some key areas where AI is expected to make a significant impact. 1, enhanced macroeconomic forecasting through modeling of complex systems, scenario planning, and stress testing. 2, deeper insights into financial stability through identifying systemic risks earlier and preventing fraud. 3, monetary policy, personalized monetary policy by designing and implementing more targeted policy instruments tailored to specific sectors or regions, and by central bank digital currency management. 4, automation and efficiency gains through automating routine tasks and enhancing decision-making support. 5, exploring uncharted territories like climate change analysis and development of financial inclusion products and services. So thanks to Bart for kicking us off here. Now let us see what our panel members think about Bart's answer. And I pass the word to Kombe with the question, how do you believe AI will impact a central bank?
Thank you very much, Leon, and thank you for the introduction. Greetings to all the viewers. I think that's a very important question, following up with what the AI central banking conference has brought out the last two days, and I think predominantly central banks are knowledge institutions. So as central banks work towards financial system stability and price stability, at their core of their function is a lot of knowledge, which they have to assimilate and make sense out of. So predominantly, you find that almost all central banks, regard knowledge and data as their crown jewels. So there's a lot of data, there's a lot of knowledge, but ultimately, central banks are also entrusted with issues of monetary policy and making sure financial systems are stable, financial systems are safe, and financial systems are secure. So ultimately, to achieve all that, central banks are not lying behind, and with a lot of emerging technologies coming the last 10 years, central banks have risen to the challenge to make sure that they make use of these emerging technologies to make sure that those functions of safety, stability, and security are achieved efficiently. And I think with the onset of AI, now central banks are leveraging on their vast knowledge bases, their vast repositories of big data to make sure they build more insights and foresights onto how these knowledge bases can assist in coming up with safe and secure monetary policies, which brings in stability within the country and within regions. And I think the other very pertinent responsibility of central banks is of course supervision of financial services providers, supervisions of commercial banks, supervision of non-bank financial systems, supervisions of payment systems providers, and to supervise those effectively and efficiently. You find that central banks get a lot of data in terms of returns, which they have to manipulate. They have to get insights and foresights from that data. In the past, you find that central banks have tried to evolve and try to make sure they get most out of that data. but most of the time you find that they mostly used to use back in the days, even Excel spreadsheet to do analytics and get insights and foresights in that data. With the onset of artificial intelligence now, and with these huge deposits of data at their disposal, artificial intelligence now is coming in to assist with these supervisory functions. Now there are platforms that aid in supervisory functions using SupTech as a technology, which predominantly makes use of artificial intelligence to look at all these sources of data from supervised entities and then create insights and build on that and make sure they effectively supervise these institutions. Also, the onset of regulatory technologies, where in terms of regulation of these entities, you want to have some kind of some kind of intelligence using AI to use, again, these crown jewels of data and make sure you get foresights. So with the onset of artificial intelligence, most central banks have jumped on that, and they're trying to use artificial intelligence with their crown jewels in terms of data to now go one step further. In terms of economic focusing, central banks are using artificial intelligence to do that most diligently, but ultimately to make the final decision, there has to be some human interface to make sure if there's any biasness in those artificial intelligence models, any black boxes, at least a human being would be there to look at that decision and pass the final decision. But also other very important application of artificial intelligence for central banks in terms of automating their back office operations as they do FX trading, as they do back office settlements, obviously issues of as they communicate, multi-language communication. I find that AI is being applied there. Also issues of using legal co-pilots, using research co-pilots, making use of AI to look at new business opportunities and see how best they can make these supervised entities and the environments in terms of monetary systems safe, stable, and secure. So in a nutshell, central banks have embraced these new technologies, especially for AI, to also push their agendas of, especially in developing economies, issues of financial inclusion, providing that accurate credit scoring basis using analytics of this big data. Also, issues of financial education. In developed economies in SADC and Sub-Saharan Africa, financial education is key because you want to build financial inclusion, onboard new customers, and make sure the unbanked are banked. So from all this explanation, you can see that these emerging technologies, and specifically artificial intelligence, comes in very handy. Also, the most notable applications also include, improved security, fraud preventions, issues of enhanced know your customer and combating financial terrorism, enhanced efficiency in terms of stability, also personalized user experience, issues of financial literacy programs, accessibility issues, and just to make sure the overall personal privacy and data security issues are looked at. So in a nutshell, these are some of the applications that central banks are looking at to make sure most of these emerging technologies are being used effectively, and most importantly, AI, but they're being mindful of all the risks that AI comes with, the biasness, the black boxes, but ultimately, the main goal is stability, safety, and security. I think I'll end there for now. Thank you, Leon.
Okay, good. Great, Kombe. Thanks for that expansive answer. Massimo, do you want to add something to that?
Sure. I would say a few things just to add up what he said. First of all, generally speaking, we have to say that AI adoption has been actually slower in central banking than in private sector financial institutions. But the AI influence on central banks is threefold. First, immediate implications, then short-term implications, and then long-term implications. The immediate implications come from a fact. Central banks analyze vast amounts of data, and AI is all about data. So AI offers new ways to collect, clean, analyze, and interpret available data. So it gives insights from AI can feed into statistics, risk management, banking supervision, and monetary policy analysis. AI can be used for ordinary day-to-day operations, monitoring and decisions, such as payment system operations and the monitoring of economic activities. Now, if we look at the experience, for instance, of European Central Bank and its use of AI, this is quite interesting because ECB is exploring the opportunities of challenges of AI together with other central banks in the European system of central banks, also with the national competent authorities in the same single supervisory mechanism, and also with the Bank of International Settlements Innovation Hub. Now, ECB uses AI, but how does it do it? ECB collects, prepares, and disseminates data from over 10 million legal entities in Europe, which are classified by institutional sectors. And this basic classification is really an issue because it is about financial institutions, non-financial corporations, and public sector. But classifications must be standardized to have the right data to support ECB decision-making process. Now, in the old days, manual standardization was and still is very time-consuming. Machine learning techniques allow to automate the classification process. Also, short-term implications are related to the fact that the use of AI for analysis of price-setting behavior and inflation in the EU. Machine learning allows to collect a huge amount of real-time data on individual product prices. However, and this is a very important issue, data collected are largely unstructured data, and this is where AI comes in. And they are not directly suitable for calculating inflation. So how AI can help structure this data to improve the accuracy of central bank analysis? Through fine-tuning process. That is essential. And also the use of AI for banking supervision is essential. In fact, there is a need to analyze a broad range of relevant text documents, like supervisory assessments and banks' own documents. To consolidate all this information in one place, ECB created a platform called Athena, which helps supervisors find, extract, and compare this information. Now, using AI mode trained with supervisory feedbacks, the platform supports supervisors with classification of documents. So supervisor can now work on texts within seconds so they can more quickly understand the relevant information compared with the past. But then there's an impact on personnel as well. Why? Because short-term impact on junior central bank employees is quite important, as a large language model helps to more quickly prepare summaries and draft briefings, which can assist and speed up the decision-making activities within the central bank. So large language models help improve and even replace the work of junior CB employees. Large language models also can improve text by being written by staff members, making the central bank's communication easier to understand. And then the longer-term impact, as the time goes by, central banks may embrace the superior use of cost savings that comes from replacing employees with AI. This includes, for instance, PhD-level AI analysis about forecasting risk, inflation, and other economic variables. So with the skill level for such work, while that skill level is higher for the ordinary activities, the long history of repeated research coupled with standard analysis frameworks leaves significant amount of material for AI to train on. And AI may well in the future outperform human personnel in such activities. And senior decision makers might come to appreciate the faster and more accurate reports by central banks. And then this is already happening rapidly, for instance, with ChatGPT AI overseeing forecasting. So in the end, in extreme cases, such as deciding how to respond to financial crisis or rapidly rising inflation, those events, by the way, typically happen once in a professional lifetime, human decision makers have a competitive advantage since they might have to set their own objectives. This is where AI is at a disadvantage and may be outperformed by human analysts. In such a situation, mistakes could be catastrophic. So in general, human decisions makers make mistakes more often than AI, but AI may make better decisions than a single human most of the times, but not in exceptional circumstances.
Okay, great. Ritesh, you want to add something to that?
Hi, Leon. Yes, thanks to Combe and Massimo, they have added a quite significant value in their responses, and I'm trying to find out that where I can add more value. So in nutshell, like when you think about AI, let me start with a generic view that there was a quite a lot more fluff than the reality of the AI implementations, right? Now, when we talk about the central banks or the financial institution, and then the central banks, in the central banks or any institution, any large institution which has got a responsibility of supervision, monetary authorities, managing the money across the country, huge responsibility, right? So at the same time, you think about first and foremost to bring operational efficiency. So there was quite a lot of systems which have been implemented over the period of time. I wouldn't say just now because we are talking about the Chat GPT in the recent past, and I'm pretty sure my fellows Massimo and Combe will agree to this, that we have been implementing systems and using artificial intelligence for well over decades, right? In a different shape and form. So if I talk about the real-time fraud management and the real-time tracking, that's what we have been implementing for well over a decade and a half. If we talk about bringing operational efficiency in the supervisory and the monetary of the money and the transactions, that's what we are doing well over 2 decades, right? Now, the extent and the implementation of artificial intelligence has changed with the sophistication of the technology. So what my fellows has said, that's absolutely right. There's a lot more focus, as Massimo has mentioned, about the Athena program in the ECB. It is a phenomenal work that is undergone, right? Similarly, in the BIS, there's a significant amount of work which is happening at a central level. It is not just at a single central bank, but at central level in terms of the research and development of the system which can be built up and implemented across the various economies as well. So there's a lot more focus around that, how we can utilize the technology and how we can bring in the operational efficiency in a business, because the central bank's role has changed dramatically in last decade from various perspectives, because obviously the surface area has changed. When I say the surface area, it's the digitization and the various product and services which are there. At the same time, the growth in the fintechs, financial institution and surface. My friend Combe has mentioned a very good point about the financial inclusion. Let me tell you, like, we are addressing a major challenge in the financial inclusion, but the inclusion is not a challenge, right? We are dealing with the financial literacy in the first place, and where we are utilizing the AI, and I can give you multiple examples how we are doing that, and empowering the bottom of the pyramid, right? Because if you go globally, everybody talks about the financial inclusion, but let me tell you, like, the financial inclusion is not a challenge. The biggest challenge, it's not a challenge for the financial institution only, it's a public policy issue, right? So how we can utilize technology to address that challenge at the bottom of the pyramid where people don't have access to the technology. Now, coming back again to central banks, the way they are utilizing the technology, it's phenomenal, like we have never seen earlier. If I talk about the CBDC, whether we talk about Nigeria or whether we talk about any other region, they're utilizing artificial intelligence to understand the behavior as well as the building the model for the adoption of CBDCs in retail, right? And that is a way forward. So there is a huge implementation as well as the use cases of the artificial intelligence in the central banks, but at the same time, let me come back from the basics again. That's what we have been doing for decades. just the extent of the technology has changed because it's a lot more cheaper. The compute power as well as the memory and the storage is a lot more cheaper than what it used to be. And that's what has given us the wings.
Okay, great. Thank you. I think as we move forward, I may ask you to keep the responses a little bit shorter. Otherwise, we'll end the panel with 2 questions. So maybe we will limit the responses to a minute or a minute and a half so that we get through a few more questions. Maybe on that, I'll pass this question to Massimo, and we may already have touched it. So if we look at the central banking and AI, what is the one area where you think it will get introduced first on a large scale, and what impact will it make?
Well, I mean, as we said before, the impact of AI is quite important on central banks. And in the United States, they are already making some inroads in the use of AI. What is interesting is the fact that in general, machine learning is very good for predictions of data vis-a-vis standard econometrics and regression analysis, which is more about explaining data. So if you want to make a prediction, you use more AI and machine learning. If you want to do a standardized explanation of what's happening, you use econometric and regression analysis. So you already see that there are 2 different tools being used in the market. And there are also AI-driven credit scoring systems that appear fairer to younger consumers and low-income people compared with the traditional tools, because conventional credit score misclassify 30 to 50% of consumers, meaning they put them in the wrong risk category. And this has an impact also from an inclusion point of view. AI models do a lot better. You could improve credit scores by using more advanced prediction technologies than those used by the big credit scoring companies. So in general, as I said, just to make it short, AI improves the applications being used by central banks, and that has a positive impact also on the market and on the low-income people.
Okay, great, thank you. Kombe, what is the one area where you would see it used first in a larger scale?
Yeah, I think for me, I see central banks, and I think even just across the globe, most central banks have adopted AI mostly to achieve their supervisory functions, because they're supervising these several financial services providers, banks, non-banks, payment system providers, and they're getting a lot of reporting from these institutions. So that's huge an amount of data, and AI has assisted to deal with those mundane tasks, where now as this data gets reported, AI assists getting insights and foresights and just see the trends of how these financial institutions are performing. That way, issues of financial stability are dealt with. But I think for me, for central banks, those are easy wins, where they've got large amounts of data lakes, try to get insights and foresights. And of course, like mentioned by Massimo, economic forecasting is key also, because those are mundane tasks. You want to use the huge amounts of data you have at your dispository as a central bank, and make sure you get insights, you do economic forecasting. Even when you come up to make decisions, you already have analytics. Research is a big area as well. But I think the most critical ones now are supervision of supervised entities, research and economic forecasting. And those, you find that those are mundane tasks, AI comes in and assists. But ultimately, as AI gives their insights and foresights, and then the human specialist now comes in and just makes the final decision. So I think for me, those 3 key areas of implementation of AI by central banks. Thank you.
Good, thank you. Ritesh, what would you think is the one area